Ben Bernanke has spoken, and now investors all around the world have a much better idea of when the Federal Reserve will start cutting back on its massive stimulus program. The Fed chairman said that process could begin later this year, and the bond purchases could end completely by the middle of 2014. But only if unemployment and housing continue to improve. Wrapping up a two-day policy meeting, Ben Bernanke noted that the economy is doing better. Still, policymakers left the Fed's key interest rate unchanged at 0%. Investors didn't like what they heard, and stocks and bonds sold off on the news. The Dow tumbled 206 points, the Nasdaq lost almost 40, and the S&P was down about 23 points. In the bond market, yields on the 10-year Treasury note shot up to 2.35%. That's a level we haven't seen since March of last year. Our Steve Leisman has more on Bernanke and today's Fed news.
Federal Reserve Chairman Ben Bernanke dropping something of a bombshell on markets today, saying that if the economy follows the path that the forecast says it will, then the Fed could begin tapering its asset purchases by the end of this year and ultimately end them in the middle of next year when the unemployment rate is around 7%. Here's what he said in his opening remarks.
If the incoming data are broadly consistent with this forecast, the committee currently anticipates that it would be appropriate to moderate the monthly pace of purchases later this year. And if the subsequent data remain broadly aligned with our current expectations for the economy, we would continue to reduce the pace of purchases in measured steps through the first half of next year, ending purchases around mid-year.
In the Fed's Open Market Committee statement today, there were also some surprises. The Fed said that the risks to the labor market and the economy had diminished, so a little bit more upbeat. And the Fed also reduced its forecast for inflation by a very strong half a point this year, all the way down to 1%. The Fed says it's looking for 2% inflation. But of course, the Fed continued the current purchases. So one of the big headlines is there was no tapering. And there were actually not one, but two dissents in the statement today. Federal Reserve President of St. Louis, Jim Bullard, dissented for dovish reasons. He thought the Fed is not aware enough of inflation, while Esther George from Kansas City says she did not support the idea of the additional asset purchases by the Fed. For Nightly Business Report, Steve Leisman.